The stock market is at an all-time high. Investors pumped a lot of money into stocks in the past year. And since they reported a higher inflation rate in the United States, there is a chance that the Fed will raise the funds rate. And if that happens, stocks will drop in price. We know that stocks are really expensive now. It's one thing that the market average, the S&P 500, is at high valuations, but it's also hard to find any individual stocks today that are undervalued. In fact, I didn't buy any stocks this month. So when the inflation rate is rising, the Fed usually tries to control it by raising the funds rate, because nobody likes too much inflation. And rising interest rates would cause a price drop in the stock market. This is because when interest rates are low, companies can borrow money for very cheap. And when companies can borrow money for cheaper, they can grow faster. And if the Fed raises the interest rate, stock prices will probably fall a lot. So are investors selling stocks and moving to cash, and should we do the same? As I mentioned, I didn't buy any stocks this month, and it seems like I'm not alone. If you take a look at the S&P 500 the past month, it's almost completely flat. So this is one sign that investors are more careful now, but this doesn't necessarily mean that the prices will start to go down anytime soon. It just means that stock prices were already way ahead of the economy. This is what usually happens. Investors try to price the future. And if we take a look at individual investors, we can see that they are piling up some cash. For example, Warren Buffett sold more stocks than he bought. He only bought shares in 5 companies, but he sold shares in 13 companies. However, these were his moves in the first quarter, and we don't know his moves in this month yet. So there's definitely a trend amongst investors. They are selling more stocks and not really buying. But this doesn't mean we should sell everything and move into cash. First of all, nobody could ever time the market perfectly, at least not in the long term. People can get lucky occasionally, but it's not a smart move when people are trying to predict the short-term movement of the market. It's absolutely proven that most people lose money in the stock market because they are too active. They sell and buy back their stocks too many times, and they do it with a poor result, because nobody knows the future. We know that the market will be probably much higher in 15 or 20 years, but nobody knows where it will be in the next month. Nobody knows if the Fed will raise interest rates, and even if they raise it, then nobody knows where the market will be going, up or down. Nobody knows what will be the inflation rate. Nobody knows if the market will go up tomorrow or drop 20%. Of course, many investors are piling up some cash now, but it doesn't mean that we should sell all our stock investments. I'm also piling up cash and didn't buy any stocks this month, but still 75% of my money is in stocks. So it's not a bad idea to have some cash in hand in case there's an opportunity comes, but selling everything and keeping all our money in cash is absolutely a bad idea. You have to remember that investing in stocks is a long-term strategy. We buy a company for at least 20 or 30 years, or even for longer periods. Let's say you sell your stocks today. When will you buy them back? Maybe in a month, or 3 months, or a year? People lose a lot of money doing this. What if the market doesn't drop for the next 10 years? I know people who want to invest in stocks and they are waiting for a drop for 6 years now. And we had really great returns in the past 6 years. And remember that market crashes are very rare, and we had one drop last year. So it's highly unlikely that we will have another one in the next years. Of course, everything is possible, but it's just highly unlikely. So yes, stocks are really expensive now, and it's hard to find any undervalued companies. And it feels like we should sell everything now before the market drops, but most of the time we shouldn't trust our feelings when it comes to investing in stocks. People who follow their feelings lose the most money. What we should follow are common sense and historical data. We know that people can't predict the market crashes, and those who just hold their stock positions earn the most money over the long term.